Eric Muathe at Muathe.com. Let's take a look at the chart for Nokia and OK, and we can see today it's experiencing a huge drop. Now this is the weekly chart. If I show you the daily, you can see today being October 26th 2017, huge drop. Stock gaps down, it's down about 21%, a huge drop. Now I'm sure there's some news related, and I'm gonna put those in quotes. So I'm sure if you're interested in the stock, if you own the stock, you're gonna say, oh, it's all based on that. But I think there's another way of looking at this. In my own opinion, since I only follow the charts, and when I look at reasons why potentially the stock is down, well, let me show you some of the reasons why. And yes, I am sure there is a news story somewhere, probably is making the headlines. I'm not looking at the news. I'm sure there is the news aspect, but let's take a look at the technical aspect. And I think the technical aspect to me is more telling. So let's begin first and foremost with a couple of observations. We know that when a stock drops below 50 on its daily RSI, it experiences a big drop. But here, not only is the stock dropping below RSI 50, it is also dropping below RSI 30.9. So it is doing two things that it shouldn't do. And that's why you see this major drop. Now I'm pretty sure if this is the first time you're coming across this type of talk, you're like, what the hell are you talking about? Well, there's gonna be a link in the description of the video that is gonna explain this in much more detail. Okay, let's take a look at something else. Recently, the stock tried to break out. If you go to the highs, there is a breakout attempt. Now, here's the question I have for you. Was the stock able to break out and hold above the breakout levels? The breakout levels being the previous daily closing highs. Was that breakout successful? No. What does that mean? It means that the stock did not have the appetite for lower prices. Failed breakouts are notorious for taking stocks lower. So again, you see that even here, a couple of months ago, there was something wrong with the picture before this drop. Also, consider the following. We tried to break out and make a push to new highs on a daily closing basis here, but the strength of the technicals was not good. In other words, it's what the technicians called negative divergence, where you diverge. Prices go higher, the technical picture deteriorates, and that is good enough for a warning sign here at the highs just under 6.6. Alright, there is another way to look at this. On the way up, when it was moving higher, the stock would recover consistently back above the RSI 50 level for that re-entry. Recovered back above the RSI 50 level here for this re-entry. Recovered back above the RSI 50 level here for this re-entry. But now something changed over the last couple of months. Here we failed to hold back above the RSI 50. In other words, there was rejection. At the same time, so that gave us that high. Another rejection period here. You went above RSI 50 and back below it with uniform action, which gave this a short-term high. And recently, we formed a nice double top uniform action above the 50 line and back below it, which gave this another sell signal. There is also another way to look at this. So what I'm going to do is introduce a line that is going to give us more information. This line here connects the lows from here and connects through these lows here. What we're going to do is draw a line, and then we're going to extend that line. So in fact, let me take that stuff out of there. And what we see here is if you draw the line should be something like this. You get interesting levels. So let's take a look at those levels. Of course, the lows here, connecting the lows. Nice line. And then something changed over the last couple of months. Break below the blue line, which is this movement here. Resistance on the blue line, failure to move above it for that daily closing high. Resistance, uniform activity rejection on that blue line, a backtest fail for that daily closing high. And here we have a double top rejection for the recent daily closing highs. So even before today's drop, we were seeing lots and lots of warning signs. And don't forget, there is the other obvious point of view where we have the 50-day moving average acting as resistance, 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 50-day moving average acting as resistance. And don't forget, while it is acting as resistance, the 50-day moving average is coiling down, indication of declining strength. Now that's just the daily. There's more. Let's go to the weekly. Now I can spend many hours talking about this one single chart here, but let's keep it simple. We go back to the breakout attempt. You can see here it tried to move above this weekly closing high. The breakout attempt failed. For 2 weeks it was unable to hold above the prior weekly closing high. In other words, this is a failed breakout attempt. Failed breakouts, as we know, are notorious for taking stocks lower. So the failed breakout was a warning sign, and since then we started seeing it drift lower before the huge drop today. Also, as we noted on the daily chart, take a look at the attempt to break out came on declining technical strength. So that negative divergence is another reason why that was a warning sign period also. Don't forget that there is uniform activity rejection here at the 69.1 threshold, or close to it. It was rejected when trying to move above the 69.1 threshold on the RSI. Hence, this is another warning sign. Now that's the weekly, and I say we can spend a lot of time on this one single chart, but let's take a look at all the data from a monthly chart. So this is a monthly chart spanning since 1994. So almost 23 years of monthly data. I'll show you some things that are interesting here. At least I think they are interesting. So if you take a look at the RSI, you can draw a line connecting the RSI top side. Should be like that. And what you see here is over the last couple of months for 2017, the stock hit that level twice. That is uniform action, double top rejection. And this is at the highs here at about this, above the $6 price range. All right, that's one view. There is another view. And to understand where this view comes from, it is what I call the uniformity concept. There is a line here that is a break. Now, once we break below that line on the RSI trend here, we come off the highs of 2014, 2015. We take the break, that precise break, and draw a horizontal line, which is what I call the uniformity line. And you can find, there should be a link in the description of the video, but if I forget, just search for the word uniformity on my YouTube channel or on YouTube, and you should come across a long list of videos that I've done going into details on this concept, which is my own original concept. I don't own it, life owns it. But what I'm saying is, it is my own discovered method. I call it uniformity. But what we see here is with the line, you get this double top rejection area. Again, at the highs here in the $6 plus range. That was another layer of warning. Now it so happens, interestingly enough, that this blue line here is at about the 61.8 threshold. Just something to keep in mind. And again, this concept of the RSI and the 61.8 threshold, the Fibonacci constant there, is something that I have been researching and seems to make a lot of sense. And you can learn more by taking a look at some of the videos I have on YouTube or maybe any other platform in the future. Now, if we take the same line here and go backwards, you find that it gives you a lot of interesting information. The same line that became a problem in 2017 has been very critical in some of the major moves for this stock. What do I mean? Well, let's take a look at some of the bullish periods. We can see here we went below the 61.8 level, or the blue line on this chart. We go below it and back above it with uniform action. Looks like a double bottom support, so which meant the re-entry back above 61.8 was a buy. You come here, you hold the line with uniform action for the lows of late 1997. You break below the line, or below the 61.8 level here, off the major highs of 2000. You find resistance on the same line off the highs of early 2004. You move above the line in 2006, which is here, for this entry for a bullish swing trade. You come back and test the blue line with uniform action for this re-entry in 2006. You break below it in 2007, early 2008, which is this period here, for this movement lower, and on and here we break below it in 2015 off those highs, and in 2017, as we've seen, this became double top rejection, and of course that is one of the reasons why the stock is responding with this move lower. So yes, I agree that what on the surface seems to be driven by some news event, maybe earnings, I don't know, is actually not the truth. The true picture is that the stock had come back to many levels, many layers of resistance based on the daily, based on the monthly, and based on the weekly charts. And if you understand what to look for, there were lots of warning signs even before today's drop. Eric Muathe at Muathe.com. There's lots of videos on my YouTube channel if you want to learn more about some of the things that I look forward to. All the information is free for you, so why not indulge, learn something. Maybe you might be able to avoid some of these sudden news driven events. Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. ERCS. Woo!